All right, in this one, let's have a look at Target. They've actually just released their Q2 results. So let's have a look at those. And yeah, let's have a look at the share price and what is exactly going on with the business of Target and all of these retailers, because they've all had such a good run over the last 6 months or year or so. And actually, the share price for Target is up 50% over the last 12 months, but up $30 over the last month, which is a huge move over the last month. And that is because of very good results, which we'll get onto. But also just because investors know what's happening. They see what's happening. They're obviously not stupid, and they can see that these big retailers, so we've had good results from Walmart, Home Depot, Lowe's, they're all seeing much more traffic, many more customers coming in and buying things. They've all had very good results. Target are definitely not to be left out of that one. So the share price has moved, and it's moved massive. It also moved on the results. There was a massive gap up in the share price. Is it too expensive now? Has it gone too far? Is this just the wrong time to get in? Have you missed the move? Do the fundamentals match up with this massive move in the share price? All of these questions, hopefully we can go through and answer a little bit. So let's take a look at Target, and bear in mind that Home Depot, Walmart, they've all had very good earnings right now. But in terms of Target, so the share price now around about $152. That's giving it a market cap of around 76 billion, which, not the biggest. So there are some bigger ones out there, including Walmart. So, maybe room to grow for Target. But in terms of the dividend yield, about 1.8%, 1.7%. So again, not massive dividend yield. I guess the share price has had a big move up recently, so it makes the dividend yield look a little bit worse. Price to earnings ratio of around about 28, which, again, isn't a massive sort of price to earnings ratio. I've seen a lot bigger out there in different industries for sure. But in an industry like this, which, doesn't have the most stellar growth usually, these valuations are looking okay considering the stellar growth that it's had recently, which, is that a one-off because of the health situation? Are they really just having a great year, but maybe will pull back next year? Obviously, that's something that investors are going to have to look at. But in terms of the results from Target, it was a great quarter. It was blowout. So a 10% increase in comparable sales in their brick and mortar stores, which is extremely good growth for a company like this. It's not a young growth company for sure, but their sales overall were up 24%. And that means they had a big growth in online, which of course is something that people are looking at. And this apparently was the strongest quarter that they've ever given us. $3.38 earnings per share. And that was versus $1.62 that was estimated. That's an absolute blowout. They basically more than doubled the estimated earnings per share. So wow, that is just a brilliant quarter from Target. And like I said, others have had good quarters as well. Walmart, Home Depot, Lowe's, they're all doing well, but wow, that is insane earnings per share. Also, something I want to highlight is that the same day services, so that's pick up, drive and collect, and also Shipt. That's Shipt with a T, SHIPT. They made an acquisition of this company, which is a grocery delivery service, same day delivery service. Check this. This is up 273%. So that is just crazy numbers. And we obviously can see this is the growth of the business online, not just online, but food delivery, same day, pickup, all very big growth businesses for them. That was only 6% of sales though. So as you can see, growth businesses, growth areas, still not the fundamentals of the company though. So as you can see with the financials, great growth in terms of revenue and income. And what I do like to see is that the cost of sales hasn't really risen too much in terms of, the revenues have increased, but the cost of sales have stayed relatively the same in terms of percentage terms. So they're not paying too much more for these extra sales, which just feeds in with the line that they've just got more customers. They're doing the same thing, just with more customers, and so they're making more money. Net earnings per share though up 80%, just insane. So they're making a ton of money in this quarter. It is a crazy quarter. Earnings per share of $3.35 in this quarter, which is a huge jump over what's normal. So like I said, what are they going to do with this cash? Because they have had a great quarter. The dividend yield is looking quite small now. The share price has had a massive run up. So what are they going to do? Are they going to maybe raise a dividend? Are they going to buy back some shares? They have been doing that. You can actually see in the results. I'll show you in a second. But what they're going to do with this cash, they could even pay a special dividend. That is possible, just to pay a one-off dividend. They made so much cash. Maybe they don't have any plans for it over and above the other investments that they're making. They could just increase shareholder value by either increasing the dividend, some share buybacks, or maybe even a special one-off dividend in this case. Inventory is also pretty much the same as it has been. So that's a good sign for me anyway. It means that even with this increased more customers, more sales, they're not having too much trouble with inventory. So they can supply their customers, which I think is a good thing. They've kept the same amount of inventory. So it really means that there's no issues with supply chains or their business in general. And even with this higher demand, they can manage it. So I think that is quite a good thing. And as you can see, the costs, they are really paying the same for their stores. So with the increased custom, their base of costs is really the same. So I think that's a good sign. They can just really have this extra demand and they don't have to pay too much more for it. When we look at liabilities, they do seem to have taken on some debt. So that ticked up here, 14 billion versus 11 billion. And to be honest, that's okay for me. Why would they borrow more money? Well, to be honest, now is just the best time ever to borrow money, especially for these big businesses which can borrow at very, very low rates. It's basically free to borrow money right now. So don't see that as a downside. So yeah, as I said before, they have actually spent money on some share buybacks and also some dividends. So that's about 1.5 billion spent on that, which is a good amount, and it does increase shareholder value. So I like that. But 7 billion in cash is amazing. 76 billion market cap. So it's trading at 10 times cash on hand. You have 8 billion in inventory and what looks to be very good demand going forward. So in terms of what other people think of the stock, so we have Jim Cramer here on his show. Does he think it's a buy even at this price? He said it is hard after we move so much to come in and say, you know what, you can still buy Target, but you can still buy Target. That's just his opinion anyway. So he thinks that Target's work on e-commerce is extraordinary. So that is really echoing what a lot of people are saying. It's a great company and it's going into the right areas and it has made a lot of money, but the share price is extremely high, which is exactly the same as every other business that is doing strong right now. There are really no bargains in the market right now. If you have a good business, then the share price does reflect that. So just looking at the share price chart and what's happened since those results, as a beginner investor, if you're looking at getting into this, it just does look so difficult to buy it right now. It did gap up. It's trading pretty much at all-time highs. And, the equity, it does have a fundamentally good business and it is quality, but you will have to pay up for it. As I said, there are no bargains in the stock market with good companies these days. There are a lot of companies that are doing badly. The share price is doing badly, but any company that is performing well, the share price is not cheap. That's just what you have to deal with these days. If you got in at a lower price, I'm sure you're very happy with the way that it's gone. So what are the headwinds for the company going forward? Definitely, how is the economy going to be in the next 6 months and 12 months? Is it really recovering? We're seeing jobless claims creep up a little bit. I think Target said, and some other people said, the stimulus checks are really important. Actually giving people that stimulus to go and buy it is helping them. Will that stop in any way? If it does, they're not going to be the only ones affected by it. They will be affected with all the other big box retailers. And to be honest, it looks like these big guys are just taking a lot of share away from the little guys, which more or less is just a net positive for them. According to tipracks.com, the consensus price target is $164. That's actually a little bit above what it's currently trading at. You've got 15 buyers, 4 holds, and 1 seller of this stock apparently, and currently trading at 152 the stock. So the consensus price target is for another little bit of upside, but going on from there, obviously those prices will change as time goes on. So about Target, it's a very solid business. People like what they've done with the move to e-commerce, also with Shipt with a T at the end. The delivery, it just looks like they're moving into the right areas, the right businesses. Footfall is very good. These are one-off quarters. They just got given an absolute gift in terms of everyone shutting down except for Target, Lowe's, Home Depot, Walmart, Amazon as well. So they've been given a gift. They've done well. They made a ton of cash. They have really healthy balance sheet looking forward, and they're moving into the right areas. So it's a very solid business, and the share price is reflecting that. No bargains in the market right now. Let me know what you think of Target, the share price, the business, and everything. Do you have them? Do you want to get them? I'd love to know your thoughts in the comments. That's it for now, though. Thank you for watching. Like if you liked it, and I'll see you in the next one.